Hey everyone, this is your Entrep Guru, Avinash Ramsabag, and today I am going to take a look at statement of comprehensive income. Now, I know for some of you, especially for those of you who have no experience in accounting, this area may be a little bit of a issue for you all. So I'm going to try to simplify it a bit for you all so that at least it will be a little easier for you all to understand. So first area, what exactly is a statement of comprehensive income? And as we would see here, it's a statement that shows the company financial performance over a specific period. And specifically, it will focus on the profitability of that business. There are some key elements of this area. And in the elements, we would realize the flow in terms of how the statement of comprehensive income should be done. So the first part that you would see here would be your revenue. And from that, you would take away your cost of sales in order to get your gross profit. Now, your gross profit, as we would see then, is just the difference between revenue and the cost of the item itself that you are selling. Now, that might be the cost of purchasing to resell, or it could be the cost of making in order to sell. Afterwards, now, what we will do is that we will minus our operating expenses. So these are expenses that we incur in order to generate that revenue that we would have been making. So some of these expenses, these operating expenses that we look at are selling and administrative expenses, and also general expenses. So selling expenses would be things such as your salaries for your salespeople. It will be in terms of delivery costs to carry goods to your customer. Administrative expenses would be your office expenses itself. And your general expenses would be any other expenses that you would incur in order to generate profit. When we minus our operating expenses, we will get our operating profit. And then afterwards to that, we will add, we will minus other expenses and add other income to get what we call our profit before tax. Afterwards, we will also minus our income tax expense in order to get our net profit or our net income after tax. And then afterwards to that, we can add our other comprehensive income to get our total comprehensive income. And that will be our final figure. Now, these are all areas that we will find in our statement of comprehensive income. But please remember, it's not as complicated as we might say. All right, so let's take a look at a worked example. So we're going to take a look at it step by step. So the first one that we had said is that we try to determine what our revenue is. So revenue itself is the total amount earned from goods sold or services that you have provided. So an example of this is if the company is selling 1,000 units and each unit is being sold at $50 each, then the revenue generated is going to be $50,000. The next area that we have is our cost of goods sold, and this includes costs directly related to production, such as your raw materials costs and your direct labor costs. So examples of it, one example of it is that if each unit costs $20 to produce, then we're taking the same sales amount that we had from before, and therefore we're taking 1,000 units that were sold and multiplying it by the cost of production, which was $20, to give us $20,000. So thus far, we will arrive at our gross profit, if we remember what we said before. And with the gross profit, we're looking at how much money that the company makes from just selling its products, minusing just the cost of the item. So you're not minusing any other expenses, for example, as you would see here, rent, salaries, and utilities. So again, revenue minus cost of goods sold gives us gross profit. So our revenue of $50,000 that we had calculated before minus our $20,000 for the cost of goods sold would give us a gross profit of $30,000. Afterwards, we will deduct our operating expenses. So as I had indicated before, we are looking at selling expenses, administrative expenses, general expenses. So in this case here, it will include things such as our rent, salaries, utilities, and other costs. And an example would be if our operating expenses are equal to $10,000, then we will be able to arrive at our operating profit, right? And this is our profit before interest and tax. And therefore, it is our gross profit of $30,000 minus our operating expenses, which are $20,000 so far. Afterwards, we can add any other income and deduct any other expenses. So, for example, what we have here is that sometimes we will make investments and we will earn an interest on it. So as you would see here, we have interest on our investment income of $500, and we also could have borrowed money and incurred an interest on it, in which case we will have an interest expense. So that is $1,000, and therefore our net amount would be a positive amount, which is revenue of $500, and we minus our expenses of $1,000 to give us a negative amount of $500. All right, please note that if you see anything in brackets, that means it is a negative figure. When we are finished calculating that amount, we will arrive at our profit before tax. So we have now taken into consideration our interest itself as before. So we take our operating profit of $20,000, and really and truly we're supposed to add the other income minus expenses. But what happened is that because we had arrived before, as we would see here, at a negative figure, so we are supposed to add a negative figure. And in maths, anytime we add a negative figure, then we have to minus it. So it will be 20,000 minus 500, and that will give us our 19,500. Afterwards, remember, as I said before, we had profit before tax now. So therefore, we have to calculate how much is our tax. So an example of a tax rate would be 20% of whatever income that you have before tax. So therefore, we will take 20% of our 19,500 that we had calculated before, and we will arrive at 3,900 when we calculate 20% of it. Afterwards now, we have to calculate our net profit after tax. Therefore, it will be after interest and after tax. So it will be 19,500 minus our 3,900 that we would have calculated for our tax. And therefore, we will arrive at 15,600. Now, sometimes it is that we will have some other comprehensive income that we will also have. So these would include unrealized gains from foreign exchange. So sometimes we would have we may have foreign exchange, we may take it to the bank and realize that we have incurred we have earned an income from it. Or sometimes we may revalue assets and they may go up in value. So in this case now, we can have some other comprehensive income being put in, and we have an example here of a gain from revaluation of property of $2,000, and therefore when we add that on now to our 15,600, we will end up with our final total comprehensive income of 17,600. So just reinforcing that, this is what the final statement is going to look like. Before, what we were showing is our working for each individual area. As you would see here, we have our revenue figure of 50,000. We will minus our cost of sales of 20,000 and arrive at our gross profit of 30,000. Afterwards, we minus our operating expenses, and we will arrive at our operating expenses of 10,000, and we would arrive at our operating profit, which is our earnings before interest and tax of $20,000. When we minus our interest expense of 1,000 and we add our interest income of 500, we will arrive at our profit before tax of 19,500. When we minus our income tax expense of 20% of that 19,500, that gives us our total of 3,900. And when we take that away from our profit before tax of 19,500, we will arrive at 15,600. And then afterwards, when we include our gain from the revaluation of 2,000, our total comprehensive income now is 17,600. Now, just one or two things to add into this is that please make sure that, as you would see at the top, the name of the business is included, statement of comprehensive income, and for the period ended is how you will head it up if it is that we are doing it for a statement of financial position that has just for a period that has passed. If it is that we are doing it as a forecasted statement of comprehensive income, then instead of the terminology for the period ended, we will say for the period ending. All right. And also, many people ask me about how many columns should a statement of comprehensive income have, and I always say the most important one is that you must have one, all right, and that is for totals. All the other columns that any of these financial statements have, these are for working purposes. So once you have that final column, that's the most important one. In summary, just want to make sure that we make sure and remember some of these areas. Revenue and cost of goods sold is what we will take into consideration in order to determine our gross profit. We deduct our operating expense to get our operating profit, otherwise known as earnings before interest and tax. We include other income and expenses to find our profit before tax, minus our taxes, and finally, we will add other comprehensive income to get our total comprehensive income. So that's it for me for today. I want to thank you again, and don't forget to like and subscribe to the Entrep Guru. This is Avinash Ramsberg. Take care. Bye.